Let's talk a little bit about deposit boost. In particular, I want to talk a bit about something that I think is really important, which is more to do with mindset. So, um, many of you will know who are first time buyers trying to get on the property ladder that Help to Buy came to an end last year. And since then, the government hasn't announced any other form of assistance to help people get on the property ladder. And certainly within kind of the circles that I operate, speaking to people who work in financial services industry, the mortgage area specifically, there is still this kind of earnest need for some assistance for first time buyers to help with that deposit, because these are the main challenges that people are facing, right? We have a situation where house prices are increasing more than your wages are increasing. Interest rates recently have meant that now mortgages are becoming more um, unaffordable, right? So there are a concoction of things working in your against you to disadvantage you effectively. And so to have developers, so the likes of Barrett's, Persimmons, David William Homes, a ton of them kind of come to the market and say, right, what we're going to do is we're going to create a scheme to help people get on the property ladder. As far as I can see from the research, it's not exclusive only to first time buyers, it's for home buyers, is what they basically say. But it is a form of assistance. Now, I did a talk for Barrett's last week, and I did the video yesterday, Monday, which is part of the podcast conversation. And I want to go back over this podcast conversation because I feel as though it didn't really get the kind of traction that I would like it to get. I know that many people who watch the channel and many people who are on YouTube are first time buyers. They really, really need help with their deposit. And so I want to retouch on this. But I want to point out something that is really, really important, which I see as a common theme whenever I make any videos about any schemes or interest rates or savings accounts. And I think it's one of those situations. I read the comments sometimes and I'm just like, really, we should be better at this. Okay. So first and foremost, look, we already know that there's a lot of issues going on with affordability now, interest rates. We've already established that. Help deposit boost is not a direct replacement for help to buy. Let's just get that out of the way. This is being funded, and it's being pushed specifically by developers. So if you are in London and you're looking to buy a flat and you've got a number of developers, you should be asking whether they offer deposit boost. Similarly, if you're in a different part of the country where you're looking to buy a property and you're looking at various developers, you need to be asking them whether they have deposit boost. Now, what is deposit boost? Deposit boost is where the developers will give you a 5% boost to your deposit based on the sale price of the property. So if you're going for a £200,000 property, you need a minimum 10% deposit, and the developer is going to give you an extra 5%. So essentially, what that's going to mean is that you're going to go from a 20 grand deposit, which is 10% that you need to get as a minimum. Then they give you an extra 5% to another £10,000 on top of that. Now, what that does is it will push you into an 85% loan to value, which is actually going to be to your advantage because it now means that you're going to get better rates. That's fundamentally how deposit boost works. Now, it's really, really important to know different developers may have different terms and conditions for this scheme. So if you are, for example, in London or in Sheffield, or I don't know, Manchester, wherever it is that you want to buy, you need to check what the terms and conditions for this scheme are. Now, for my research, this amount doesn't need to be repaid via any equity of any kind, right? It is a loan from the developers to help you get on the property ladder. I shouldn't say a loan, a contribution from the developers to help you get on the property ladder. Okay. So it's that little leg up. You will physically not receive the cash. The cash will be transferred to the solicitor once you've completed on the mortgage application itself. So you're never going to physically see the cash. It will go via your conveyancing, your solicitor that's dealing with all the paperwork, the legal side to the transaction. Which leads me on to the the things that I think are important for us to bear in mind, and the trend that I keep noticing, these schemes are there to assist you. Okay, but the world is not perfect. There is no such thing as free money. And one of the things I keep noticing when it comes to any news around interest rates, well, might as well not bother with that. It's not even going to touch the sides. Or, for example, with this one, well, if they're going to bake it into the sales price, so it's going to disadvantage the buyers. What more do you want? Like, let's think about this from a pragmatic point of view. It is not free money. The developers are the ones who are funding this. So in some way, shape, or form, we live in the real world. They have to find a way to actually fund the deposit that they're going to give. Now, think about it from a business point of view. The advantage for the developer is more people buy their homes. The advantage for you is you only have a 10% deposit. They're going to give you an additional 5%, which is going to lower your loan to value and bring into the equation a more favorable affordability for you because you're going to get lower interest rates. Now, the alternative to this is maybe not as palatable as the fact that, okay, the 5% is already baked into the sale price, which means that the property price may be a little bit more, but hey, it's not a perfect world, right? It has to be funded in some way, shape, or form. The alternative is you go for a 10% deposit if you've got it, and you go into a mortgage that is potentially going to have a higher interest rate when it comes to the actual mortgage offer, therefore making your mortgage payments even higher. Okay. Now, God forbid you can't get to a 10% deposit. So you've got a 5% deposit. You're looking at a 95% loan to value. Well, a 95% loan to value is going to mean even bigger interest rates being offered to you from the lenders, which means that your affordability is going to be squeezed even further. If you think about where we are right now, we're in the midst of recession fears. We might just about dodge a recession this year, is what we're hearing in the news. But let's just assume we don't. You go into a 95% loan to value, a 95% mortgage, 95% loan to value, property markets crash, potentially end up in negative equity because you don't have as much fat as a 15% deposit, which gives you an 85% loan to value. So these are really, really important factors. What I'm trying to say here is always try and ask the questions about these things because it is not free money. Okay. And neither should you expect it to be. You know, speaking at this Barrett's event last week, it's actually quite refreshing to see that the developers are trying to step in some way, shape, or form. It is not a perfect solution, 100% not. And it's not going to work for everyone. But for people that it is going to work for, I think that it is going to be a really good vehicle to help people get on the property ladder who may be struggling right now, particularly when you start looking at the loan to values. And maybe I need to do a different video on loan to values and what that essentially means for the mortgage. But affordability is an issue right now and is going to continue to be an issue whilst the banks are in this position where they're going to be stress testing people's finances even more because of the cost of living crisis. And so I think it's really, really important. Mindset is so key here. Don't just write these things off because you feel it's going to disadvantage the buyers. Yes, it may disadvantage some people. It may not be suitable for some people, but then you have a choice of not using it. But I think try and be pragmatic and try and at least find out a little bit more. I see this a lot with interest rates and savings rates. Oh, there are banks offering 4.35% on a instant access or a 2-year fixed rate. Oh, that doesn't match inflation. Might as well not bother. Well, if that is the attitude, might as well not bother. And I think what it comes down to is trying to control the controllables, right? Really taking into consideration what are the things that you can change? What are the things that you can control? Can't control interest rates, can't control inflation. So you have to try and make the best of a bad situation to the best of your degree. Same thing applies with the housing market. Is this likely to change at any time soon? Interest rates don't appear as though they're going to be going down. I don't think that's the consensus. There's a lot of mixed news in the tabloids right now. International Monetary Fund basically talking about the fact that they feel as though interest rates will come back to pre-pandemic levels. They don't say when. And what they're talking about there is the Bank of England, right? Government, Fed rates, Bank of England rates, not necessarily mortgage rates. And when you start looking at mortgage rates historically, we're still at a very, very low point in terms of interest rates. And so I think we need to be braced, to be prepared for the fact that this is the new norm. And as this is the new norm, we have two choices. We can complain, we can reminisce about, oh, rates were 1.5%, 2.8%. Those days are likely not coming back. So we have to be pragmatic and accepting of the fact that this is where we are right now, and try and use all of the tools that are at our disposal to make the best of the situation. Mindset is everything. And a lot of the negativity that may come across with this, well, it's going to disadvantage people, might as well not bother. That's a mindset. And negative mindset does not move you forward. You have to approach things with a positive mindset. The challenges are already big enough if you're not on the property ladder. You're already facing a huge challenge to get your deposit. This is a direct piece of help for your deposit. So why not explore it with an open mind to see if it's something that you can actually use, that is actually going to help you get to where you want to go sooner, in opposed to having a pessimistic view of it and writing it off immediately. And that's kind of what I wanted to touch on in this video, because we're in a very, very uncertain environment right now, and this uncertainty is going to continue. There is no sign of there being a potential sea change in interest rates suddenly plummeting back to normal levels that we've been used to over the past 10 years. I think those days are long gone, and we need to adjust to the new norms. And so when we talk about getting on the property ladder, which is one of those bigger challenges for people, you have to take the help that is available to you. Yes, you need to ask the right questions. Yes, you need to understand how it basically works, but don't write it off without actually having a look at it, because if it's there to help you, look, it's there to help you. And not all the people will actually have assistance like this. So there we go. Anyway, look, guys, I appreciate you guys in the comments. Food Dweller, thank you very much. Ned is asking here. Ned is just asking here thoughts on going for a 2-year fixed rate or on a tracker at the moment. Look, mate, I just think that rates aren't going to be coming down anytime soon. I think this was probably going to be where the norm is, unless we start to see the Bank of England base rate increase over the next month or 2 to 3 months. They're saying we're going to see one last rate hike in May, which will take us to 4.5%. But that's going to be heavily dependent on what happens with the inflation number. And if inflation does not begin to fall, so the prediction is there'll be another rate hike in May. And after that, what will happen is that inflation will start to trail off quite rapidly. If that doesn't happen, and inflation either remains the same or keeps going up, God forbid it keeps going up, then it is likely we're going to see the bank rate move up. And that means if you're on a tracker, that's not going to be a good place to be. So fundamentally, it's going to be boiled down to, do you need that stability from a financial planning point of view? Do you need stability in understanding and knowing that your bills are going to remain the same each month? Or are you okay with the possibility that, your mortgage payment might increase because interest rates have increased? I mean, we've seen 12 in the last, 13 or 14 months. It's a lot. People have taken big, big hits on the mortgage who have been on standard variable trackers or standard variable rates or trackers, right? So are you prepared for that? Because there's a lot of other stuff going on that will dictate whether or not we'll see mortgage rates, the Bank of England rate and mortgage rates fall. And I don't know. I just feel as though there are too many variables, and if you're in a position where you need to know what your outgoings are, then fixing is probably going to be the better route to go down. But if you've got the financial resources where you can weather the storm, then maybe a tracker would be good for you as well. But your decision is yours to make, Ned. Really, really tough call to make in times like this. Meji, hi, how are you? Welcome, welcome. Haven't done one of these in a while. Well, I actually did one with Sam last week, about 5 days ago, but I've not done one of these where I've just jumped on just to speak to you guys um, for a while. But anyway, it is. I've lost my date already. It's mad. It is Tuesday evening, so I appreciate you for tuning in. Um, what have I got going on at the moment? There's other bits going on at the minute, which I'll be posting about. But this week is a little hectic for me. What I would love though is if there are any specific mortgage questions that you have, maybe put them in the comment section of this video. I'm trying to get some of the developers on to talk about deposit boost. There's also another one called deposit unlock, but I want them to be able to explain it in terms of how it works with them practically. But oftentimes when you're trying to get brands onto a channel to do things like this, it has to go through certain departments to see who's going to come on. And then because it is financial services, there's a whole load of hoops around things that can be said, can't be said, what language to use. It's a bit of a nightmare sometimes. So I'm trying to get someone on from one of the developers or a number of the developers on to explain this properly. Um, but yeah, I'm dependent on their availability and their willingness to actually come on. But I appreciate you guys for watching this. If you did find it interesting, feel free to share it and maybe smash a like on the video as well. But guys, have a good Tuesday evening, and I will see you later on.